A very good morning once again, ladies and gentlemen. We are about to start our training for today. I want to welcome each and every one of you to this training. My name is Margaret Kashina from Tax Education, Marketing and Communication Department. And I am joined by a number of our trainers who are our subject matter experts from domestic taxes. Before we introduce them, we're going to have a word of prayer and then we start the session. So let us pray. Heavenly Father, we thank you for this day. We are grateful for each of us and for enabling us to log in for this training. As we start this session, we pray, may you help our trainers to have clarity of mind and thought. And for us, the rest of us, may you help us to follow through, that this training shall be of benefit to us. For we pray that, shortly believing and trusting in Jesus' name. Amen. So as we continue with the training, I would like to urge us, those of us who have questions, you can put it in the chat box or Q&A. We will have a team that will be responding to your queries. And towards the end of the session, we are also going to have a time of reading out some of the questions, and we will have our panelists attending to them. So without further ado, I want to welcome our team from BTO and from eTeams. Amongst us, we also have our sign language interpreter, who is Madam Faith Cheptile. She will be joining us for this session. We thank you, Faith. I hope she is visible. As we proceed, you will see her. Okay, so I think we will start our session. I wish to hand over to Madam Grace to take us through.
Good morning, everyone. My name is Grace Gathia from Domestic Taxes Department, specifically Business Transformation Office. I will be your lead trainer for today's session, where I'll be taking you through the VAT Auto-Populated Return, but I will spend more time addressing different questions we have received from taxpayers and also our officers, so that we all benefit from this particular sensitization. But before I begin, I want to wish everybody a happy new year. I'm allowed to still say that. I think I'm still within the grace period. And thank you so much for joining in and maintaining, or rather keeping time for joining this particular session. So if there are no, I know my team is joining me. I have my colleague Anthony Thuo from the Business Transformation Office as well joining us, who will be supporting you on the Q&A part of the Zoom platform by answering your questions before we get to the Q&A session. I also have my colleague Cheryl, who will be joining a bit later, and also Shami as well from the Business Transformation Office. I know we have our eTeams officers also who will be joining just to assist in tackling anything relating to data when it comes to eTeams or Teams invoices. So with that brief introduction, allow me to just go straight to the presentation for today's session so that we cover as much ground as possible. I would want to address at least 90%. I think I've already had a run through of what I've seen in the Q&A chat of your questions so far. I'll try also incorporate the responses through the whole training. So allow me to first share my screen with you, and maybe Margaret, you will confirm that it is visible. Mandy?
I confirm
Is my
we can see the screen. Thanks, Grace.
You can see it or you cannot see it?
Grace, we can see the screen. We can see your screen.
Okay.
You're sharing the entire screen. Thank you.
Okay, thank you so much for that. So the first part, I know we've already shared the links for the documentation that provide guidance on the VAT auto-populated return in the chat already. So I'll just allow me to go to our KRA website to demonstrate the same. So the first documentation I want you to have a look at, or maybe you can have access to, is the step-by-step guide on the VAT auto-populated return. So you go to publications, then you come to reports, guides, and manuals. It should be on the just a minute. It's on the third page. Pre-populated VAT return step-by-step guide. It's the third item from the top. And if you click download, we published this 28th November 2023. And if you were to download this document, you would have visibility of the step-by-step guide on actually how to use the same auto-populated return and how to incorporate the CSVs that are already being availed to you. The second document I would want you to have visibility of is a FAQ documentation, which is actually what I'll use for the better part of this sensitization. Again, under publications here, you go to tax education. Then under tax education, it is the second document on that first page, the frequently asked questions on the auto-populated VAT return, which was published on 9th July 2024. It's basically this document that I will use for the better part of the presentation. As you can see, it provides all the system error messages that you might be encountering or you have been encountering from the filing of the November 2024 return and how to go about it. As this is what basically I'll use, but I'll also take you through the actual filing process of the VAT auto-populated return. Now, there's also a third document that I feel is quite important. If I go to, just let me type the word list. Um, it should be this one. I'm looking for the list for goods and services listed in the first and second schedule of the VAT Act. This document, I feel like it's very important because we are having a lot of cases where you are expecting some of your sales to come in as zero rated sales, which is local D1, or exports or exempt, because those are the two, rather the three categories that have specific HS codes in line with the VAT Act. So there's a lot of mix up when it comes to the HS code you're using at the point of invoicing. And if you don't get it right in terms of using the correct HS code before you invoice, then of course your data will not be auto-populated as you expect. And that is one of the biggest challenges most of our taxpayers are encountering when it comes to sales which are zero rated and also exempt. So that is the other third document that I feel that is very pertinent when it comes to having a 360 view of the VAT auto-populated return. Now, with that, allow me just to go back and now show you from the iTax portal side of it, how the login process and where you can access the VAT auto-populated return. So I'll just log out and log back in. This is our own test environment. This is not a production environment. So I'll just log in with a PIN. So I've logged in. You go to returns, file return. You select the obligation, which is VAT. and then it populates the second page. Now, we have done an update of the VAT return version, which was delivered to the live environment yesterday. Yesterday was 15th. Yesterday. So most of us might have encountered the same. You might have downloaded the auto-populated return before yesterday and you are using the version 15.0.8. I would like to officially announce the version of the VAT return has been changed. So you're supposed to for anyone who's not yet filed the VAT return, kindly download the return once more since the version has been changed to 15.0.9 and you will encounter a challenge if you're using the old version of the return. The reason why we did this change is because we have implemented actually not part, in whole, the changes of the tax law amendments 2024 that were assented and took effect 27th December 2024 on any aspects relating or touching of the VAT return, because those changes actually ideally will be affecting your December 2024 return, and hence why they change in the version. So again, let me reiterate, please ensure you're using the correct VAT version return. It should be 15.0.9. That is the return that will go through. Now, for once you land on this particular page, you'll see that you have three hyperlinks where you can access the VAT return, and you also have this tab written, the black one, download auto-populated VAT return. Allow me just to show you the difference between the two platforms of accessing the return. So if I click here on that hyperlink, which is there, this is what I get. You realize if I use that hyperlink to access the VAT return from my iTax portal, one, I do not have CSV files. That's a first thing. The second aspect, I have the VAT return, but the difference is if I was to open this return as it is not pre-filled with any information. Sheet A, which carries the basic information of the taxpayer, is not pre-filled. You can see what I mean by saying the version has been changed. In row 2, the version is 15.0.9. So for this particular return, nothing comes pre-filled. So some of the queries we keep on getting from taxpayers is, I'm accessing my iTax portal, but I have no CSV files. It depends where you're accessing the auto-populated return. If you are accessing it from where I've clicked that hyperlink, then yes, there are no CSV files there, because that is not where we have embedded or rather implemented the auto-populated return. So this particular return has no pre-filling. Every sheet is actually blank. You can still use this. It has the same validation rules that we are using when it comes to the auto-populated return, but the difference is you will be using your own data to import in this particular return, which to me, from where we stand, it creates a bigger problem when you're trying to reconcile your own data with what has been transmitted and has been availed in iTax. So I'm not saying you cannot use it, you can use it, but I feel like you start a bit further when it comes to the filing process of the VAT return. So the return is basically blank, it has nothing captured on it. It is still applicable when it comes to the validations we've put in place, but it will give you a hard time when you're filing the return. So that is not what I want to use for today's sensitization, but it was just basically to explain the different access points of the VAT return. Now, where I want us to focus on is here, download auto-populated VAT return. I will still download it, but because this is a taxpayer's data, I will not avail the CSVs for public view. But I just want you to see the difference between the two access points of the VAT return. Just give it a minute. So I think on our end, there's an exercise. I've just been notified something is being done on the same test environments. But ideally, once you download the auto-populated return, it will give you a zip file for the CSV files, and it will also provide the VAT return. The difference is that the VAT return there, which I will be displaying as sample return on the same, will look like this. So I'm using the old version for purposes of just this training. So please just note the version is 15.0.9, but ideally this is how the VAT auto-populated return comes in. For the basic information, it comes pre-filled. Of course, your PIN will be there. And then for the general rated sales, if you have a B2C transactions, for this entire sensitization, I'll be using the words B2C and B2B, which is a bit easier to consume also on your end. But basically, when I say B2C transactions, I mean any sale transaction that has been done to an unregistered taxpayer, whether they provided their PIN or they did not provide their PIN. And then now for B2B transactions, we are looking at a sale transaction that has been done to someone who's registered for VAT, and that is the difference. So you can see sheet B has a pre-filling for B2C transactions of 7 million. We have sheet C, I'll explain that and why it's still there. And then we have D, because other rated are no longer available as per they were removed through the Finance Act 2023. And then for zero rated, again, for zero rated, there are two categories. There's D1 and D2. D1 applies to local or exempt availed transactions. And then now for D2, we are looking at exports. So if I had sales for for B2C transactions and a D1, it will be auto-filled here. And then now for exempt sales, these are exempt sales as per the VAT Act. And then again, if I had B2C transaction sales to customers not registered for VAT, this row would actually be pre-filled. Now, how the CSVs would look like for my particular taxpayer, they have a section B. They have section B without PIN. This is how your CSVs actually come in. They have section D1 with VAT PIN. That's B2B transactions. And then now there's a change that has happened. We implemented a change again yesterday as just to align with the tax law amendments amendment for 2024. You are aware that it has brought in the time of supply of exports. It's very definitive in now the current amendment, where we are saying that the time of supply for export. So what you're trying to say is currently with the auto-populated return, you will not have any CSV for D2. Let me say that again. With the current auto-populated return, we shall not be availing. We have removed the pre-population of D2 for exports. For the simple reason, we want to give us time to do a proper integration with ICMS because of the change in law on the time of supply for an export, which is being deemed to be when you are in possession of a certificate of export or any other document that has been provided by customs. Any other document, we are looking at the certificate of receipt, we are looking at approval notification or exit note. A certificate of receipt applies to exports to an EPZ or an SEZ. When we're looking at an approval notification or an exit note, we are looking at exports to an EAC region. Then when we are looking at a certificate of export, then we are looking at exports to a foreign country. So the destinations are four. As per customs, we are looking at a foreign country, an EPZ or an SEZ, and we are also looking at an EAC region. So right now, if you have not filed your VAT return and you are to download it today, right this instance, I guarantee you, you shall not have any CSV for D2 exports. Additionally, the other relaxation we have done for D2, we are no longer validating the line items and we are not validating the total amount specifically and only for D2. All the other validation rules for all the other sections of sales, we're looking at sheet B, we're looking at sheet D1, we're looking at D1, and we're looking at sheet E, the validations remain. So this is actually, I think, a breathing space for anyone who has still been invoicing with the wrong HS code. The anticipation has been that you would receive the data as your exports are coming in as D1 exports. But now with the relaxation, you will manually enter your exports. Now, at the ground level, where now our officers will come in, that is where compliance will come in. Because ideally, you're not supposed to declare any sale if you do not have the certificate of export. That is now a key trigger for compliance, audit, and also for anyone who's undergoing the refund. Actually, for refund processing, that will be a key determinant. If you're lodging a refund claim right now based on your export and you do not have that certificate of export, automatically that will warrant a rejection from refunds section. So take note of those key changes in the tax law amendment 2024. So for my taxpayer, they have section F. So these ones I use them for the previous training, which allow me just to delete because now they are not relevant for this particular filing of the December 2024 return. So I will just rely on section F, imports, and then I have section F, local, with VAT pin 1. It means those are local. And then I have section I, which is for exempt purchases. We are aware that for some scenarios, for some of our taxpayers, you are not having zero rated purchases auto-populated in your CSVs. We are aware of the same. It is something that is still under resolution and will be delivered after the due date, which is after Monday. Due date is Monday next week. It has no implication on your VAT position because these are zero rated purchases. So what will happen once that solution has been delivered, you will just basically, because I know for most of the taxpayers, it's just to reconcile their books, having their VAT return aligned with what they have in their books. So you will amend your return since it has no implication on your VAT position. It will be an automatic approval by the system because it has no impact on your VAT position, so that now you upload or rather import the CSV. So as we stand right now, even if you have the invoices for zero rated purchases, you cannot manually introduce them because they are not availed on the side of iTax. Do not manually introduce it yourself. Allow us to provide a solution for the same after the due date, and then now an amendment of the return will be an automatic approval. That should not be a really big challenge. Again, it has no impact on your VAT position, and therefore it should not pose a challenge when it comes to filing the return. So let's start with section B, sales. I know we are all filing, some of us are still filing the November return, some are filing the December return. My data is for November, so allow me just to use November dates. So once I enter the return period 2, you can see sheet C is visible as other rated sales. What will happen is once I enter that date, it disappears because for the tax period of November 2024, other rated sales and other rated purchases are no longer in low, and therefore that sheet will not be available for you to use. So as you can see, C has disappeared, but also G is not available for use. Now let's start with sheet B. Sheet B, if I have, as you can see from my data sets, I have this data. So there, if I was to avail this CSV, I haven't done masking of the data, so I might not open the same data. But if you were to open the same CSV on your end and do a comparison of the total amount in that CSV with what has been auto-populated in the return, which is 7 million, it should tally, and it will tally. So it is, this 7 million is stemming from this particular CSV file. This is not imported in the return. What we import are transactions to a registered taxpayer, which is now this CSV. So that is how my data looks like. Um, it's about 1,000 invoices. For sales, let me speak to sales to for self supply. Now, you are a seller. You have done a self supply, which is applicable to law and it is valid. So let's assume, for example, this is the PIN of the same taxpayer who is filing. My PIN is ends with 806D. I am the one who's filing this return. In my auto-populated return, because I am also registered for VAT, that particular self-supply transaction will be also availed as long as it's transmitted. Remember, the basis of the auto-populated return is transmission, 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 transmission. But if that information or that data is availed in my sales B2B transaction, if I was to import that CSV with the same line item, I will not be able, the system will communicate that since the PIN is for the same registered taxpayer, that particular sale should cannot go through. I know the exact words are not like that. The exact word is actually, the exact system communication is just a minute, because it is documented here. Here, the exact system communication is PIN entered should not be same as taxpayer's PIN. Anytime you come around and you find that message on the sales part, then you know we are talking about a self-supply. You have a self-supply in your data, and because you're importing the CSV, that return cannot go through. The system will communicate that. So what are you supposed to do? So let's go back to the CSV. Let's assume this is the self-supply, whatever I have highlighted in row 35. So you need to manually remove that line item. By manually is I'm gonna do a deletion. I will delete it. The value, it's a credit note. Let me use a taxable figure. It applies to both credit notes and debit notes. So let me first use a taxable amount. Say, for example, that was a self-supply. So when we say you manually remove that entry from your B2B transactions, what we mean is you delete it. It has a value of 1.7, let me round it off, 1.75991.01. So I will manually delete it like that. But I take note that that taxable amount has to be accounted for in the return. Because remember the validation rules of sales, you cannot under declare as per what has been transmitted. So the fact that I have manually deleted it from my CSV so that I'm able to import it, then I come back to my return and make the adjustment here on the lump sum. So it was about 1.76 million. So this amount of 7 million, I will add it. I will increase it by this equivalent taxable amount of that self-supply. So if I'm working here with 7 million, I will work with around, let me just round it off, it comes to about 8,7,600. Let's assume that's the figure. Sorry, I've added an extra zero. So I increase it up. So when we say, when you're having self-supply transactions under sheet B, even if it's under zero rated or even exempt, the treatment is the same. The treatment is the same. So you manually delete it in the CSV you are importing, but you must make the same adjustment in your lump sum under the respective sheet where you have the self-supply. So you adjust your lump sum upwards. Because remember, the validations for the totals, we are not now, because now you've removed that particular transaction, the system will not keep on telling you, because it's validating. It's looking at your PIN, it's looking for your PIN. You cannot declare it. Now, for self-supply on the purchases side, is a tad different. That is no longer, I know anyone who had who was filing their returns before 14th, because we delivered the solution yesterday in the afternoon. your data right now, if you're to download the auto-populated return, under purchases, you do not have self-supply invoices under purchases. The clarification is under purchases. Under sales, they are there because remember, you cannot under declare them. So the workaround I've given you on the manual movement of that self-supply is how you deal with a self-supply transaction. But for purchases, the data is no longer there. So when you download it afresh, the self-supply transactions won't be there. And that is how you treat a self-supply transaction on the sales side and on the purchases. So let's take note of the same so that we don't get stuck on an issue around self-supply. The system has been enabled in a way that you can still file that, you can still declare that invoice. Now, let's have a discussion around, let me just import that CSV. I want to have a discussion around credit notes. I know there's no issue for sales. I know there's no particular challenge for that. I know self-supply is where there was a big challenge. And the aspect of the system communicating amounts. Now, let's look at the aspect of declaration of the amount specifically. If you're trying to declare your sales under sheet B, sheet D1, okay, sheet D for D1 local, and then sheet E. Remember the validation rules. You cannot under declare your sales. So if you look at what I'm presenting in the screen, look at serial number 1. The file section is B, general rated sales. Details, please note that the total general rated sales cannot be less than 99 million. So when the system communicates that, it means you are trying to declare an amount lower. For sheet B specifically, you cannot declare an amount lower than that. It has to be exactly that. Remember, you're still able to use your own data. But if you're not using our own data, then now you need to do a reconciliation so that you know how that 99 million should be declared. And it should be declared as per what we are auto-populating. If there's an attempt to change the taxable amount on a specific invoice, the system will communicate an under declaration. This is on the sales side. An under declaration. You cannot alter the details on a line item for any invoice under sales. The system will flag it out. Whether you're capturing the PIN wrongly, whether you're capturing the invoice wrongly, whether it is the invoice date that is incorrect, if it's an issue of the amount, the system will be very specific on the amount as well. So where there's alterations of the PIN, the invoice number, the invoice date, and the taxable amount, the system will communicate. It will actually highlight that sale. Now let me allow me to have a discussion with taxpayers who have very high volume transactions under sales. We are looking at, you have sales of 10,000 invoices in your data, even 5,000 invoices, 7,000, 8,000, 15,000, 50,000. I have seen 75,000. Now, the maximum capacity of the return for sales has still been maintained at 75,000. Where we have done an adjustment, and again, it was part of what we delivered yesterday, is we have increased the transactional capacity for purchases to 100,000. So for purchases, because I know there's 1 or 2 taxpayers in our registry who've already surpassed the 75,000 marks. And it was actually just to basically accommodate those 2 taxpayers so that they are able to file. So if you have purchases that have gone beyond 75,000, the return route now has the capacity to accommodate 100,000 transactions. Remember that you cannot do an under declaration. I will address the issue of duplicated invoices much later before we enter the Q&A, and also overstated e-teams invoices, because I know that is one of the challenges that is still being posed. But basically, the treatment is, if you try to do an under declaration for sales, then the system will communicate the same. And these are the system messages you're getting. So if you get an aspect of your total sales should be this, then just go back, confirm with what we are auto-populating, and then make the respective adjustments so that you do the correct declaration. Going back to the return, I believe for zero rated, it's a bit clear on the same. Again, for D2, I've already touched on this. What we are saying is if you're filing a return today, ensure that your exports you're manually capturing. We have reverted back to how we had the return during the first rollout. So some of the things I know that will come at a later date, maybe by March, is I know we shall be introducing a new column for exports for the purposes of the final document that is deeming the when the sale has happened when it comes to exports. Again, we're looking at the certificate of export as being a final documentation. We're looking at an approval notification or an exit note, and also we are looking at a certificate of receipt. So we shall be validating that together with the custom entries number and also together with the e-teams invoice. So for now, the relaxations have been done for D2. I know also exports was such a really heated area when we're filing the November 2024 return. I know it comes also as a bit of a relief for most of our taxpayers. So the validations for D2 are no longer there on both the amount and the line item. But remember, the compliance checks now will be done at a level where officers are doing the compliance checks, whether it's the trigger is a refund process, whether there is an audit inquiry that needs to be done from KRA side, and also normal compliance checks. So I know that is where the disallowing for those particular exports or the check for the exports will be done for now before we do the validations at a system level. So please take note as one of the biggest changes in the VAT auto-populated return. Exempt sales, the declaration still remains. Again, remember the issue for HS code mapping. Please have it resolved at source. It's not something that KRA. I saw one of the questions come in through the Q&A section where a taxpayer was inquiring what happens to, I have export services that have been auto-populated under D1 and I'm not able to move them under exports. You see, the solution doesn't lie on our end, it doesn't lie on the return. The mistake happened at source at the point of invoicing when you used or applied a wrong HS code. And that is how the data was mapped. So we need to get it right at the point of using the correct usually general rated the HS code is now because we don't I don't think we use that unless it's an aspect of e-teams. But ideally for exempt, because they're very, very distinctive, and zero rated, they're very, very distinctive as well. Ensure that you get it right at the point of invoicing. The solution is not on the return side. The solution lies at the invoicing stage. So for now, the declaration remains the same as the data has been auto-populated. Because remember, in D1, the validations remain. We will validate that total amount. So you cannot drop them. You can't drop those invoices. They will be declared as is. So now what will happen? You will issue a credit note with the same erroneous HS code so that it comes back and cancels. That credit note cancels that sale. And then now you can, because now we've done the relaxation of exports, what will happen moving forward before we finalize on the integration with ICMS, you will manually now capture that particular export correctly. And that one can only be done in the January 2025 return. For now, declaration remains as is. You will declare it as D1, which is local zero rated sales, as they have been auto-populated, as you continue working on fixing the HS code issue. Now, purchases is where I really want to take time on because this is where we have most of our questions coming in. Now, the cardinal rule for the auto-populated return, which should have been my starting point, and I apologize for that, is the most important thing we all need to remember. Auto-populated data is not static. That is the starting point. Auto-populated data is not static. It's not something we can deliver on providing static data because even transmission is not static. We don't have a distinctive date when it comes to transmission of invoices. We are having even invoices from 3-4 months back being transmitted now for whatever reason. And therefore, this is always my advice. You are woken up today, and part of your to-do list is to file a VAT return. The first step is to actually download the auto-populated return. If you had already downloaded the same return on 1st January, your data is not the same. And that is why you're getting so many system errors. You can't even reconcile what means what and what is coming from what. So if the plan is to file the return today, 16th January 2025, the first step, download the return afresh. First of all, we've changed the version of the return. So you need to be using the correct version. Secondly, your data has changed. The data you had yesterday on the 15th is not the data you have today on the 16th. The data you had on 10th of January is not the same data you have today on the 16th. Your data is updated daily. Transmission, if you're online, is done on real time, but the update on data on iTax is done daily. So the first rule, because it eases a lot of the questions you're having and you cannot reconcile where the errors are coming from. The very first rule, ensure the date you want to file the return is the same day you're actually downloading the auto-populated return. I cannot emphasize that. It reduces your errors by a whooping 80%. Because some of the errors is you're using data, you had data that now you have, the system has more data, but the return you had 2-3 days ago has less data. So the incremental invoices that you're not declaring, especially when it comes to purchases, when you're looking at credit notes because they're mandatory, then you cannot even reconcile where they're coming from. So the very first rule, download your data afresh. Like now, because I know we did a delivery for self-supply yesterday and time-bound credit notes, I know for a fact if you're downloading your data today, those invoices and the purchases are not there. They are no longer there. So your data has changed. So ensure the first thing you do, if your to-do list is to file your VAT return today, download the return today. Let's work on purchases. Purchases is where I know a lot of the questions are coming in. Now, let's look at someone who has always been. This is not something that has been introduced by the auto-populated return. It has always been there. It's a compliance check. If you have bought an item, you've bought something from someone who has been placed on the VAT special table, the input VAT element of it is not deductible for that particular tax period until they are removed from the special table. This will apply to an original invoice, to a debit note, and a credit note. Let me say that again. So when your data has invoices for someone who has been placed on the VAT special table, which I will show you the communication just now, the system communication, what happens is you cannot claim that particular input VAT from that particular taxpayer. And the system usually communicates like this: the PIN this is not eligible for VAT input deduction. Relate that to someone who has been placed, the seller has been placed, that particular PIN for that seller, they've been placed on the VAT special table. Therefore, you cannot claim that input VAT until there are issues on compliance as to whatever reasons they had been placed on the VAT special are resolved. Once resolved, that is when you're claiming it. So this will apply. So once you try to file and all those specific invoices for relating to that PIN are flagged, just remove them from purchases. Whether it's a credit note, whether it's an original invoice, whether it's a debit note, manually remove them. That's the first thing. That's the first check, or rather the first rule or challenge you're experiencing under purchases. Now, the issue at hand, the biggest issue is this for purchases. Credit notes are mandatory. I repeat, credit notes declaration under purchases are mandatory. Therefore, an attempt to not declare the same credit note under purchases results in this system message. Now, to address or rather to resolve this, I think which I know is something we've taken up as feedback, we will enhance the message for this particular category because I know this is where the confusion is. The system communicates your relevant invoice number this with relevant invoice date this as per your teams or teams is not declared. Please declare it. Now, what most of us we've realized are doing, the invoice number that it comes up in the error description is what you're manually going to enter in purchases. That is wrong. That is not what the system is communicating. The system is communicating because that message, the only time you have a relevant invoice number and a relevant invoice date is when you have a credit note. That's the starting point. Let me show you with the data sets because it is easier to explain it like that. This is my section F. This is purchases. So, for example, in my data sets, if you can look at, let's work with row 2. Column J and column K in the return refer to the relevant invoice number and the relevant invoice date. So the system is communicating that relevant invoice number this 88 91 65 54 5 those zeros 91 with relevant invoice date 3rd November 2024 needs to be declared. That is the system message. So what most of us are doing are we go back, we pick this invoice number, we add it in the CSV, which is wrong. That is not what the system is asking you to do. The system is actually asking you to declare this credit notes. What I'm highlighting, that is what it wants you to do. If you declare that credit note, that error will not reappear. Just note where for purchases, the system communicates your relevant invoice number and your relevant invoice date requires declaration. You need to declare this. This is the invoice number where I'm highlighting the one that ends with 92. That is the invoice you need to declare, not the specific relevant invoice number that is in the error message. You see the difference? This one ends with 91. This one is 92. A credit note has its own unique invoice number. But as much as it has its own unique invoice number, it references an original invoice because it is a reduction of tax. So where I know we are our biggest challenge I've seen in all emails, whether it's from officers or taxpayers, the system is actually requesting you to declare a credit note. Remember, it is mandatory. And since that concept of we are not using data or rather the CSV files for that particular day, you might not even have a preview of the same credit note in your data. So again, I'm insisting there's so much importance of downloading the auto-populated return vis-a-vis using our own data. Because like for purchases, credit notes declaration is mandatory. Now, I received a question today in the morning on treatment of a credit note for prohibited input VAT. In a scenario whereby a credit note has been issued for a prohibited input VAT, for example, in the month of December 2024, but the respective input VAT was maybe for June. Let's work with June because it's still within 6 months. So in that month, you did not claim that input VAT because of the provisions of the law. The law is very clear on treatment of prohibited input VAT. So what did you do? You did not declare it. So you're feeling in the month of December, you are at a disadvantage because now a credit note has been issued for the same invoice. So what do? Remember with purchases, you can manually introduce invoices from a prior tax period as long as they're within 6 months. But remember the catch for invoices from a prior tax period is they must be compliant. The compliance comes in when you're looking at your PIN. If you're working with a PIN for June 2024, was your PIN captured? If the answer is no, then it is not claimable. You cannot claim it in the current return. And that is the other challenge that we are encountering. You had invoices from a prior tax period that you require to claim. But now when you're coming to claim it, the system rejects it for the simple reason your PIN was never captured. Remember, the cardinal rule for purchases is the PIN of the buyer must have been transmitted with that invoice. Remember that cardinal rule. That rule does not change, whether it is for a current purchase for that particular tax period or if it is for a prior tax period. So, for instances of prohibited input tax, if you have a credit note today for December 2024, introduce the original invoice from the prior tax period so that it knocks it off. So you will manually introduce it so that there is the net effect is a nil net effect. That is how you will treat that, because we cannot do a relaxation from prohibited input VAT when it comes to credit notes. So that's also something very key to note. Now, for your purchases, I know your data when it comes to debit notes, you're still having, if you look at number 5 to number 8, for example, row 5 to 8, your debit notes still have the relevant invoice number and the relevant invoice date being populated. So at the point of importing the CSV, which I can even do right now, let me just save it. Let me go to my return, section F, purchases. I import the same CSV. You can see the Excel has already communicated something. So it says, as taxable value is a positive, relevant invoice number should be blank in the following rows, 5, 6, 7, 8. So with that communication, because I know why it's saying that, it doesn't align to how our return is. So I'll go back to my data. Section F, let me just reopen it again. This is purely on debit notes. I'll go back to my data, then manually delete. For row 5 to 8, I delete the same data. And then now my CSV is ready for importation. So I will save it again. And then go back to my return. Under purchases, import the same CSV. And we're good. It has gone through. So the treatment of debit notes, one of the solutions we provided in December, as much as the data has been migrated with the relevant invoice number and relevant invoice date, the debit note will go through. But in the CSV file, you must first make that adjustment. It also applies to sales. Remember, sales and purchases is a marriage. So whatever is happening in your purchases data likely has happened also in your sales. So also sales where you're having debit notes are being auto-populated with the relevant invoice number and the relevant invoice date, the treatment is the same. Manually just delete the relevant invoice number that has been provided in the auto-populated CSV, and also manually delete the relevant invoice date for a debit note. Then import the CSV and you will be fine. The return will go through. So for debit notes, that is the treatment for that. I've touched on what to do on the VAT for any taxpayer who's been placed on the special table. Self-supply, the data is no longer available. That one I am certain. When it comes to time-barred credit notes, that data is no longer available in your CSVs. Again, that should be from yesterday around 4 o'clock. So if your data had the self-supply for purchases and time-bound credit note for purchases, as at today, if you're to download your auto-populated return, which again is the advice I want to give and re-emphasize on the same, then this data is not available. When it comes to treatment for credit notes, I have already explained what that is, because I know that is where the biggest challenge is. The declaration of that credit note is mandatory, so the relevant invoice number being communicated by the system and the relevant invoice date being communicated in the system. Do not use that particular data set to declare it in the return. Please go back to your data set and declare the credit note. I genuinely feel like that is our biggest bottleneck when it comes to purchases. But once you're able to bypass, or rather understand what the system is trying to communicate, then you'll be in a position to file your return with ease. Now, a few questions I have picked. I think the rest are a bit straightforward. I've already communicated and touched on zero rated purchases. Yes, we are aware you are not receiving these CSVs. A solution will be provided after the due date, not now, after the due date, so that now, for purposes of reconciliation, while the CSVs are now being availed, you can amend the return. Remember, zero rated purchases have no impact on your final VAT position. So it's just basically for ensuring your whatever is in the return for your audits are balanced with your books. So of course that will be an automatic amendment, unless you're in a scenario whereby you had sales that you had not transmitted, and now that you're coming to amend the return, the system will request you to declare the same sales. Remember the rule for sales: if you have sales that you have not transmitted for whatever reason, it could be a device malfunction that is making you not transmit those sales, please ensure you manually capture those sales and you do it under lump sum. Do not capture it on a line item. By a line item, what I mean is, if it's general rated, don't capture here like a line item here. No, 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 no. If you have sales that have not been transmitted, the adjustment is done on the lump sum. B to C. I know the biggest concern for that is, if I declare my sales as a lump sum, what happens to the other party who needs to claim the same input VAT from me? Input VAT right now with the auto-populated return is being claimed based on transmission, not declaration. It has nothing to do with what the seller is declaring at this point, but everything to do with transmission of e-teams or teams invoices. That is where the aspect of claiming of input VAT comes in. So ensure that the declarations are done correctly, so that even if you're not fully transmitting all your invoices, then you're still capturing the same, you're still presenting the true sale position for the months that you're filing. Remember, the rules apply for November 2024 and December 2024. If you're still having challenges with our device systems, where we are having, especially at the tail end of the month, we're looking at maybe 30th November or 31st December, where the sales for that particular month are coming in with dates for the next tax period. Again, we re-emphasize that is not an issue on KRA side. That is an issue at invoicing level and how that request is being sent to KRA. So ensure that your invoice dates are correct. And if you're having a scenario whereby, even if it's just, even there was a challenge on I think the question I got yesterday, that taxpayer had never onboarded on e-teams or teams, but they had done the declarations of the same invoices manually in other prior tax periods, but now they've done invoicing, they're invoicing now. So it's like they're getting the sales invoices again in December, but they had done declaration in June, July. Then the solution for that, again, you cannot remove your transmitted sales invoices now. You will declare them as is, then go back, and of course our TSOs are aware of the same and provide you support when it comes to amending the return for June and July to remove the same, so that your VAT position for the full calendar year also balances out. So it's really important on the same to note the same. The other biggest change we have implemented is on sheet O of the VAT return. The new version of the VAT return 15.0.9 has incorporated the other change that has brought in by the tax law amendment on apportionment. The higher threshold and the higher threshold and the lower threshold of apportionment have been removed by the tax law amendment. So what do we mean? We're looking at anything above 90% and anything below 10%. That has been removed by the tax law amendment. So right now, apportionment of input VAT is based on a percentage. And by the percentage, we mean if we look at Section 17 of the VAT Act, it is stipulated that when you take the taxable supplies, your taxable supplies for a tax period, you divide by your total supplies and multiply by 100. If that fractional, or rather that percentage, is what now we are applying with the new changes. So whether you are at 83%, 85%, 95%, that is what will be computed when it comes to determining what is an allowable input VAT in your return. Remember and appreciate that usually affects anyone who has exempt sales. I know there is this perception, if I have exempt sales, I'm not supposed to declare it in the return. That is very wrong. As long as you have exempt sales in your business, declaration is a must. That is a must declaration. So for this, like for now, my particular taxpayer, you can see exempt sales are zero. They are currently at zero. Now, when you go back to the VA sheet O, you will realize that where apportionment applies, it applies in row 16 and or rather serial number 16 and serial number 17. You can see if my exempt sales, the two fields are grayed out. However, assuming I make a declaration under exempt sales of 5 million, let me use 50 million. If I declare exempt sales to be 50 million, sheet O, serial number 16, serial number 17 have changed. So by changing, or rather, they've opened up for your declaration of the same. So you must capture, if you have any input VAT attributable to only exempt supplies, you make the declaration. If you have input VAT attributable to tax and exempt supplies, you make the same declaration. So let me say, for example, here, this is 5 million. I know this is the old version of the return, but sorry, let me first put it at 0. That had blocked me. You can see there's already an adjustment in serial number 9 and serial number 20. So if I return this to 5 million, my data changes. So the biggest gainers for this particular change is anyone who had previously a percentage below 10%, because when with the previous how the law was, if it was below 10%, there was zero claiming. If you're the biggest losers, of course, are the guys for above above 90%, because what used to happen if your percentage is above 90%, then you are allowed to claim the full input VAT, which is under serial 14. So like if my percentage for taxable supplies divided by total supplies was above 90%, I would have been eligible to claim 6.9 as my input VAT for this particular scenario. But with the changes that have come in, they are, I think that to me, not to me, they actually are the biggest losers for this, because now it is a percentage. It is actually a percentage of your taxable supplies divided by your total supplies. This is, of course, attributable. You can see in the return, we have actually done the narration here. 1 plus 2 plus 3 divided by 5 times 17, then you reduce it from the entry that you've captured in serial number 17. The 1 plus 2 plus 3 comes from this sheet M. So we are looking at this 8.7. If it was a period where other rated sales was applicable, plus that, and then plus zero rated, that is how you get your taxable supplies divided by your total supplies. Total now supplies is inclusive of exempt sales. So it becomes now number 5, which is now you can see 1 plus 2 plus 3 plus 4, which is now this 4. And that is how you do the apportionment. So this change has been effected for the December 2024 return. So currently, what you will be seeing for purposes of what is claimable for anyone who has exempt sales, apportionment will apply with the new changes in the law. So that is the other big change in the VAT return, and I know it was worth a mention. Any other data sets in this sheet usually again emanate from what is already in iTax. When we're looking at the credits preferred from the previous month, it's based on the return you have already filed. And then now for withholding VAT credits, it's as per what is in your ledger. And then now, if you have any refund application that has been lodged, again, it will be populated for you. Any DAVs or any CAVs that might have been issued in that particular tax period, December, for example, because that is the return we're filing, will be auto-populated in the return. So I feel like that covers everything. But now I want to address the rampant questions. Let's start with Safaricom. Yes, we confirm Safaricom invoices that have the excise duty component for November 2024 and now also December 2024 have a variance. Again, we had a meeting with Safaricom last week to table the same issue, as this issue is not on KRA side. I know on the invoice checker, it gives you the correct amount as transmitted, but there is another layer that is not visible to taxpayers and is only visible to us. And that is why what you have in iTax is a lower figure. So we've had conversations with them. We have a plan in place on how to address the November and December invoices. It is an assistance, or rather an olive branch, that KRA is extending in resolving this, because a lot of taxpayers are affected by this particular situation. So we are working on resolving for the November 2024 invoices and December. However, moving forward, it will be the responsibility on Safaricom side to ensure the correct excise duty component is also incorporated for purposes of charging VAT for January, moving for January 2025. So that one they are working on. We still don't have commitment timelines from their end, but KRA will only try provide an intervention for November and December 2024 invoices, because those are affected. So the solution still remains the same. If the impact of removing that particular invoice in your purchases is you will feel it in terms of your liability, you can claim it as it is, so that once the same invoices are updated, you will just do an amendment and claim the portion of VAT that was not available at that time when you are filing. However, if the impact of the same is not significant or substantial in your VAT return, you can remove the purchase in totality, as we provide a solution. Again, the solution from acceptance on our side to assist them resolve this issue, because those invoices are quite many, and only for November and December. Moving forward, ownership will even right now, ownership is still on their side, but it is for them to resolve from January 2025. That is the position. And then now, from there, now it will be, you need to take it up with Safaricom. It won't be a matter of it's an issue on KRA side, because they know there's a different layer that it's not visible to taxpayers when it comes to what you're seeing in the invoice checker and what we're seeing on the back end. We know where the issue is. We had a meeting with them last week. We explained where the issue is. They gave commitments on resolving the same. So discussions on the same are ongoing. We might not. I'm not sure we can provide the solution for the November and December invoices by the due date, but we are trying to deliver the same. If we have delivered the same, of course, we shall announce. We shall announce. Sorry, was I audible or did you lose me completely?
Grace, when the screen went blue, we lost you, but I think now you're good. Kindly confirm if
Where
you'd
did
still like
you lose
to
me at?
share. Just at the whether the resolution will be done by due date.
Oh, so the resolution might not be done, might, but we are working hard around the clock to ensure the issue for November and December are resolved. But again, reiteration, from January, I don't see KRA also providing intervention on the same, because it's not an issue on our side, it's an issue on their side. So we might just do a data fix for November and December invoices. We are really trying hard to ensure that we push the solution out at least by weekend. Any update on the same will be communicated during the training sessions. Our training sessions will still be there tomorrow, and other training sessions on Monday. We have two sessions tomorrow, two sessions on Monday. That is on Safaricom. Let's touch on KPLC. KPLC, again, we had a meeting with them. They agreed to come to the table. It's an olive branch from KRA, because this is affecting a lot of taxpayers, where the aspect where their PIN is not being captured. So we've had discussions with them. There are a few things that need to be put in place from both sides. They have also communicated their challenges they are experiencing on their end when it comes to issuance of credit notes. So we are aware of the same challenge from their side. We're trying to see how KRA can also offer. And again, this is an issue not on our end, it's on their end, but we want to see how best we can intervene in the situation, so that for invoices for November and December that are affected where their PIN has not been captured, we can provide a solution. But again, that is still at the talking stages as at right now. That is for Kenya Power. For KPA, if you're not receiving the same invoice in your data, chances are your PIN has not been captured when it comes to your purchases, and that is why you're not able to claim. Again, we need to pick it up with KPA on the same. So those are the three major uh, stakeholders I know we are having challenges with when it comes to their invoices. Now, let me address duplicate invoices. One, the scope of the duplicate invoice is on Teams. It is not on e-Teams. When I say Teams, I mean invoices that look like this. Purely numerical invoices, 19 characters. Those are the ones who are affected with duplicate amounts. Now, by the duplicate amount was when you query the invoice checker, the taxable amount is maybe 100K. But when you go to iTax, or rather the auto-populated CSV, you're receiving 200,000. And again, we re-emphasize the root cause for that is because that particular invoice was transmitted more than once. So in our database, that invoice, everything is the same. In terms of the primary key parameters from the PIN, the invoice number, the date, everything is the same, but they were transmitted twice. So in the amount, it is inflated. Some taxpayers file with the inflated, or rather the duplicated amounts. Some refrain from filing. Now, for that particular scenario, we have the invoices affected. We have already done extraction of the same. Unit testing on the same has already been done. Quality assurance will be completed today. And we are hoping we can deliver an update of those invoices today, latest tomorrow. So for duplicate invoices, we have a solution, but we are still running quality assurance tests on the same to ensure that we get it right and no other issues crop up. That is on duplicates. Again, the scope for the same is Teams. Teams invoices, not e-Teams, Teams invoices. Let's have a discussion on e-Teams invoices. E-Teams invoices, we are having a scenario of overstated invoices. As at now, we still don't have, and I know it's affecting anyone who has branches on e-Teams, and anyone who has that particular invoice had line items. It was not just one item in the invoice, it had several. So I know that is where the scenarios are those two. We are aware of the guys who are affected, and we've taken stock as the issues are also coming in, and actually want to encourage anyone who has that particular challenge. I hope you are also communicating the same to your TSO so that they are aware to the challenges as to why you're not filing because of overstated some of your e-teams invoices are overstated. So now, even when it comes to when you're able, we provide a solution and you are able to file, we will look at the TSO, of course, will consider reversals of penalties and interest based on your communication. But remember the key thing, communication is key. It is even in law. In the event that you're not able, for whatever reason, to declare or submit a return, you must inform the commissioner in writing as to why that is the case. So if it is an issue for overstated e-teams invoices and duplicate invoices, please make sure you have a record that has been submitted to KRA so that the same record from where I sit can be used to consider a reversal of your penalties for late filing and uh, for late filing. But remember, ideally, you still have a self-assessment. So when it comes to the payment side of the liability, ensure you pay what you from what you're self-assessing yourself with, and of course, with all the other invoices being correct, you have paid the liability that is due. It's a totally different discussion where no liability has been paid compared to someone who paid their liability to the extent of their self-assessment. Those become two different discussions. I know that one for a fact when it comes to penalties and interests. So it's important to note of that. Ensure you have a written record of the same and the same has been communicated. We might not be able to deliver a solution for overstated e-teams invoices by the due date, but we're still trying to work on the same. I know there's the delay in providing solutions has been, we are really also competing with putting out the changes of the tax law amendment as soon as possible. You can actually, for anyone who was filing the payee return, they could actually see the return was not ready by the time ninth was coming up, and you had to do your own manual calculations on the side so that you capture there's on the self-assessed column of the pay return of the same. So I know for now, as we speak, the pay return has been updated. It is available. It is out. We delivered it yesterday. We have already implemented the tax law amendment changes. So I know there's a competition between that and resolving outstanding issues on the auto-populated return in a way that even us, where we sit, would have wanted. There's a lot of pressure in ensuring all those changes have been made. A lot of them take effect 1st December 2024 and actually affect the returns for December 2024. So I believe mainly with that, I feel like I have touched on the major concerns. Maybe just to add one thing, I've seen taxpayers trying to do amending your November, assuming someone came and bought from you. The scenario is someone came and bought from you. Unfortunately, when you're invoicing, you didn't capture their PIN. So they're back. They are annoyed. They can't claim that input VAT because the system is rejecting that invoice. Again, it's not even it's rejecting when they manually entering it in the return, and it's not even in the CS. Because remember, when your PIN is not captured, you cannot get that purchase. That is the rule. So now they've come back to you and they are annoyed and they want to claim that because they paid you. You already have that VAT component and you've even declared it maybe in your return. So your attempt is, as a seller, is to amend your return so that if you capture that invoice, you expect that they'll be able to claim. That is not the rule. That is not the solution. The solution is you're supposed to issue that your client with a credit note without their PIN as well so that it cancels out that transaction and then reissue them with a new invoice where their PIN is captured. Please note, amending your return does not fix the issue of missing buyer PIN. It does not. You will not even be able to introduce it under B2B transactions. B2B, your PIN was captured at the point of invoicing, it was transmitted with your PIN. And that is the only time, even for B2B transaction, you can actually declare anything where the PIN is missing or that PIN was not registered, it goes to B2C. Amending your VAT return is not the solution. The solution is issuance of the credit note. So I've seen a lot of attempts, email communications from officers where taxpayers are having that challenge when they attempt to amend their returns. So that is not the solution. I think with that, mainly, I have covered everything. And so that we have enough time to also do the Q&A, just in case if there's something I have not touched on.
All right. Thank you so much, Grace Kavia, for taking us through your insights and the key elements of the VAT pre-populated return. We don't take it for granted. The last, I think, just 1.5 hours we've been going through this return. I think the main document Grace was using, we've posted the link to that document in the chat. And as Grace showed in the beginning of the sensitization, they're all available on our website. The step-by-step guide, the frequently asked questions, you will likely encounter a similar scenario that another taxpayer has raised and the resolution to the same. Grace, allow me to just give you a very short break. I think you've been doing so many of these trainings, you've already addressed the bulk of the frequently asked questions. So I'll request your indulgence. I think the bulk of the Q&A will be repeating and restating and reassuring our taxpayers. You've covered the issue of duplicated invoice, which I think is the most frequently occurring question. You've answered the workarounds and the current engagements that we are having with our government agencies, our telcos and our utility companies and the way forward on the same. So thank you for that. I think when I bring you back on, I want to hand over to Etins very briefly, but when I bring you back on, I'll just ask you to restate what the main pain point for taxpayers is. They have valid invoices, valid in the sense that they have been transmitted, they meet all the checks and balances for that word valid. They've been validated, they've been transmitted when they check the invoice checker. Their ETIMS report confirms the same. Their buyer PIN is captured, their buyer name is captured, but however, they're still unable to claim some of those valid purchases. So I think there's a lot of concern and frustration on the same, and I'll ask you to restate what taxpayers who find themselves in that predicament should do. And I think these are taxpayers who've encountered that in the previous month and in the current month. And some of them have not even been able to, they say, file their previous return. So they have concerns on that. So allow me then at this point to bring in my colleague, Madam Muthoni Arimi from the eTIMS operations team to talk a bit about some of the frequently asked eTIMS related queries that her and the team from eTIMS have been responding to, maybe just in 3 minutes or less, or 5 minutes or less. Muthoni, you can just address some of those concerns. Then we'll go back into VAT pre-populated return queries. Muthoni, good morning to you and over.
Hello, good morning, Mandy. Am I audible?
Yes, loud and clear.
Okay, thank you. Good morning to everyone. My name is Muthoni Arimi from the eTIMS Operations Unit. So after engaging on the Q&A section, most of the recurrent questions are taxpayers are saying that some of their invoices are missing when they get to the auto-populated return, especially when they want to claim the purchases. So I just want to echo what Grace had talked about. Kindly ensure that your PIN is captured at the point of invoicing to ensure that you claim this as a purchase. So most of the taxpayers that we are encountering say that the buyers, they have a valid invoice and the invoice even has their PIN number, But what normally happens is at the point of transmission, there are some devices, the team's devices that leave out the buyer's PIN at the point of transmission. So the invoice will have your PIN number, but unfortunately, you'll not be able to claim this as a purchase because during transmission, the PIN number was omitted, or rather it was captured as non-fiscal data. So how we resolve this, we request you to tell the supplier to check on the configuration of that device. So they'll have to do a credit note for that and reissue you with an invoice that has your PIN number, and the PIN number was transmitted together with the other details during transmission. So the other one was maybe the invoice was not eTeams or Teams generated, it's a manual invoice. This will not be captured on the auto-populated return, or the purchase or the invoice was not transmitted at all. So for this one, you'd have to have your internet connected properly to ensure that the invoice is transmitted to KRA and you'll be able to see it on your auto-populated return. So how else they can check on this? They can use the CU invoice checker, where they just put the KRA invoice number and then it will populate the details of the invoice. So to check is if the PIN number was transmitted with your invoice, then it will read the buyer's name while it's populating the other information. So you can make use of the CU invoice checker, or you can as well scan the QR code to ensure that this is a valid invoice that was transmitted to KRA. On the issue for Safaricom and KPLC and other parastatals, I think Grace handled that. But what I can just add is that please ensure that you tell people like Safaricom and KPLC that you'll be using this purchase as a business-to-business transaction, so that they're able to include your PIN number to ensure that you claim it. This goes to the supermarkets as well. If you're purchasing anything from the supermarket and it's related to your business, you are allowed to claim it, but you need to ensure that you tell them so that they don't make it as a business to customer transaction, but they make it as a business to business and they include your PIN number. So the other issue that I noted from the chat box was someone was asking about their invoice was in USD. So what we say is that for us, the reporting currency is Kenya shillings. So Teams and eTeams devices will transmit the information for you in Kenya shillings currency. So back to you, Mendy. I think the other questions have been well tackled by the team on the Q&A. Thank you.
Asante sana Mudhoni. Thank you, Caroline, Catherine, and Maxwell, our eTeams operations unit. And the email address you can see on your screen, that's teamsupport@kra.go.ke, is also a critical email address that you can use. I think Grace emphasized the importance of documentary evidence and writing to the Commission of Domestic Taxes. For eTeams related queries and concerns, you can escalate to teamsupport@kra.go.ke, and they typically respond, I think, within 2 days thereabouts, with an update or guidance on the same. I think we'll also emphasize that eTeams services and support are available in all the KRA offices, not just at the headquarters for eTeams along Kenyatta Avenue and JQuat Towers. But if you can't make it there to have your issue resolved, we always invite taxpayers to do so. That's 7th and 8th floor of JQuat Towers on Kenyatta Avenue, along in the CBD of Nairobi. So thanks, Mudhoni. In case maybe towards the end, if there are still some other burning eTeams related queries that are yet to be addressed, we will bring you back on. So Grace, just before you come back on, maybe to address that concern of missing invoices, especially related to Section F, allow me to make a very shameless plug for our ongoing tax amnesty program. It's not relevant necessarily to the contents of today's sensitization, but it's a very important emerging initiative out of the Tax Laws Amendment Act. As you know, once again, KRA is the bearer of good news this financial year, the remaining part of the financial year, and taxpayers who now have outstanding penalties, interest, and fines and did not take advantage of the previous amnesty. Kindly note, amnesty has been extended up to June 2025, June 30th, 2025. So again, don't wait till the last minute. Come forward now. have a payment plan going so that you can have your penalties, interest, and fines waived. And kindly note that amnesty has also been extended to have the eligible penalties, interest, and fines that were incurred in 2023 are eligible to be waived so long as the principal tax has been paid. So I hope that's clear. Take advantage and tell a friend to tell a friend. Remember that in order to have this amnesty and in order to enjoy the amnesty, you'll first need to file your return. So in case you know those individuals who are yet to file their return, afraid of the late filing penalty, notify them to file their returns so that the system can and can place the applicable penalties, interest, and fines on their PIN, and then have amnesty either automatically waive the same if there are no principal taxes due, or have them come into the payment plan option to structure how they will clear their outstanding debt between now and June 30th in order to have those penalties cleared. So Grace, I've hijacked your sensitization just a bit to notify our taxpayers on that, and we'll continue to sensitize our taxpayers over the next 6 months so that they can take advantage. Another key thing I wanted to just touch on briefly on this, in the same theme of escalating it to KRA, you'll note that the Business Transformation Office, who are the process owners of this return, are essentially an internal team. They receive information and escalated requests from taxpayers through the officers that we call account managers within our tax stations. TSOs. So we use those words, I think, throughout the training, perhaps without clarifying what they mean, but every PIN in KRA is assigned to an account manager and monitored by a team lead and a relationship manager in some cases. So for those who might not know the account managers, you can write to callcenter@kra.go.ke. And again, they take about 2 days to respond max, and they'll guide you on your tax service office, which is also included in your PIN certificate, and then further guidance on your account manager for compliance related concerns, so that you can be escalating these issues that you have via email and be assisted by the Business Transformation Office ultimately, or e-teams, etc. So Grace, I'll bring you back on just to touch on that issue of missing valid invoices. Some taxpayers are stuck. Maybe we can just reassure them on some of the workarounds we have for that. And then I think I'll ask you also to restate credit notes. Some taxpayers are also stuck because they're unable to claim some of the credit, or rather they are informed by the return to remove a credit note. When they try to remove the credit note, the return mandates them to bring it back in. So they find themselves a bit stuck. You can guide on that particular credit note scenario and any other common concerns you get from taxpayers regarding credit notes. Thanks, Grace, and over to you.
Thank you, Mandy, for that. I hope I'm audible.
Yes, loud and clear.
Now, for the aspect of missing invoices, I'll answer it in two parts. One, you have an e-teams invoice. I think maybe where we are, my communication might be not coming out so clearly. When your PIN is not captured in that invoice, we are not saying that is not a valid e-teams invoice. That is not the position that KRA is holding. What we're saying is one of the rules for you to claim an input VAT purchase is your PIN must have been captured. It is the only way we will avail your invoice. I've seen the same question coming up with KPA, and I'm certain for the KPA situation, your PIN was not captured. So the invoice is very valid. It's e-teams compliant. The issue is your PIN was never captured. And therefore, when it comes to auto-populating of the data for purchases, that particular invoice is not availed for the simple reason your PIN is not there. And that is the honest truth. That's the reason why that invoice is not there. And since your PIN has not been captured before transmission of the same invoice, you cannot manually introduce it under purchases. It means that input VAT for that particular invoice cannot be claimed. The second scenario I'm thinking for missing invoices is for taxpayers who are using Android PDA. I wish I could show you a sample invoice, but then I'm bound by data protection. But Android PDA, anyone who's using Android PDA, I know there is a problem around that area because the physical invoice that you have has your seller details and has also the PIN of the buyer. Everything physically on the actual physical document is as per what we are saying. However, if you were to query the same invoice number, either you check the QR code, you scan the QR code, or you validate it using our invoice checker, the PIN of the buyer is missing. At the point of transmission, it was dropped. And that is why we are saying some invoices are missing because physically, the physical document have been given. My PIN, I can see it. I can literally see it. The issue is on transmission. During transmission, the PIN of the buyer is dropping. And it is an issue around anyone who's using Android PDA. And I think, I don't know if Modoni can come in. I know eTeams operations have a workaround of how to ensure the PIN of the buyer is retained during transmission, but that will only resolve the issue moving forward. And I know there's an aspect of for anyone who's using an Android PDA, you're supposed to accept the upgraded version, which is the challenge, or rather the issue that is not being done or addressed at source. At source means at the point of invoicing. So if it is that category of taxpayers where I have a physical invoice, all my details are there, my seller details are there, my details as a buyer are there. But now when I come to the auto-populated return, this same invoice is not available. If you were to query the same invoice, whether you scan the QR code or you check the invoice checker, your PIN has dropped. Now we are trying to provide a solution for that particular category of taxpayers for invoices of November and December, so that for in terms of their clients or the buyer, they're able to claim the input VAT, because the people who are getting are being whipped a lot is now the seller, because now you come back and you show the seller, but I have this physical receipt, I can actually see my details, but now in my data I don't have the same invoice. Why? You cannot manually introduce it because it is not in the auto-populated return. Again, it is affecting anyone who is invoicing using Android PDA. That is the scope of the challenge. So moving forward, I know eTeams operations, and I hope they can come back in and give guidance on how that workaround is supposed to be done. But also on the ICT side of it, we are trying to brainstorm on a way of how we can sort out November and December 2024 invoices, so that now the PIN of the buyer is reinstated, and then not really reinstated is the wrong word, but provide a fix for November and December 2024, so that now the buyer, or rather the purchaser, has the same invoice availed to them in the auto-populated return. So that would be the scope for the missing invoices for the two scenarios where your PIN was not captured. And then now you're expecting it in, yes, it's a valid eTeams invoice because it has been generated by any of our solutions. But the aspect of claiming, there's two aspects here for purchases. It needs to be compliant and your PIN must have been captured. So it might meet the first criteria of it being compliant, but it has not met the second criteria of where your PIN is actually being captured. So I know it's a unique scenario for anyone who's using Android PDA. That one we are aware. I have the cases, but again, I can't really display it. But for November, December, up to where January has reached, we're trying to see how we can provide a solution for the same. But moving forward, there is also a solution that eTeams Operations Office has also communicated that is somehow more of a workaround on the same. So maybe after I'm done addressing the second issue, someone from eTeams can come on and just address the same. The second part is on credit notes. Now, credit notes, let me just repeat. Allow me to reshare my screen, because from how you put that you've posed that question. I already know where the issue is coming from. Please confirm my screen is visible. Mandy?
Yes, the screen is visible. We can see the CSVs. Thank you.
Now, for section F, purchases, issue around credit notes. This is what you're encountering as a taxpayer. Let me go back to my document. This is the message. The file section is F, general rated purchases details. Your relevant invoice number, this with relevant invoice date, this as per teams or e-teams is not declared. Please declare it. Now, at face value, on the iTax application, when you get this message, what most of our taxpayers I have seen them doing, they will pick the relevant invoice number displayed in the message and the relevant invoice date, go back in the CSV, in their CSV data, here, section F, and enter it as a line item. So my data ends there. So they'll go back here, capture that particular relevant invoice number, they say it's local, capture the PIN, the taxpayer name, the date, the relevant invoice date will be captured here, put the description and then the taxable amount, and then you import the same. Then now, again, the system throws back another error, but that is not what the system is communicating, and that's what I had explained earlier. It has communicated that your relevant invoice number with relevant invoice date, this must be declared. It has not been declared. The minute you see the error description referencing a relevant invoice number, please tie it to a credit note. So go back to your data sets. That is for section F. You can see my data from row 1 to row 4. Row 1 to row 4, those are credit notes. A credit note must be accompanied with a relevant invoice number and a relevant invoice date. Because what is the impact or the use of a credit note? It is an adjustment downwards of tax, VAT in this case. So it is adjusting a VAT that had already been charged on a sale or on a purchase. It is making an adjustment downwards. On the seller side, of course, if the sale has been made and a credit note has been issued by the seller, they will declare it because the implication on sales is a reduction of output VAT. But the same effect should be realized under purchases, which is what has not been happening. Because the input VAT has already been claimed and has adjusted your purchases. But where a credit note was issued for the same VAT component, the same adjustment has not been done under purchases. And that is why for purchases, credit notes have been made mandatory. Now, what do you do in such a situation? So the system has communicated the same. So go back to your CSV for section F. The relevant invoice number captured in that system error message is this one in column J. And the relevant invoice date that has been captured in that system message is under column K. But the system is not requesting you to declare those two. The system is requesting you to declare the full credit note as auto-populated. And that is where the challenge is. We are going back to declare the relevant invoice number and the relevant invoice date instead of actually declaring the credit note. This is your credit note. Remember, as much as it is an invoice type where it is a credit note, it has its own unique invoice number. If I look at row number 2, the invoice number for this particular credit note, which ends in for this particular credit note, ends with number with 92 at the end. But the original invoice that had been issued, which could have been issued in that same tax period or in a prior tax period. The original was issued in a prior tax period. Now is what we're looking at, the relevant invoice number. Are we saying the system message is quite clear? No, we shall do an enhancement on the same. So that moving forward, when you fail to declare a credit note, it actually communicates it is invoice number 92 that requires declaration. So that now when you go, I'm hoping it won't create another issue where now we are not declaring we're not also capturing the relevant invoice number. Because it depends. You could fix this system message, then create another challenge. But it becomes more clearer on what to do. Because I know what we're doing currently. When the system communicates your relevant invoice number this with relevant invoice date this, we go back and declare this in column J and column K. That is what we're going to declare, and that is where the issue is. Please ensure you're declaring the full credit note. And that credit note, because the taxable value has a include the relevant invoice number, which is under column J of your CSV, and the relevant invoice date under column K of your CSVs. Please note that, because I know that is where the biggest bottleneck we have when it comes to declaration of credit notes under purchases. I don't know if maybe that has come out clearly or I need to do a repeat.
All right, I think it has the issue of credit notes, especially. It's a pain point for some taxpayers, those who are saying it is what is stopping them from filing even their November returns. Maybe we should just restate and re-emphasize, if that taxpayer is yet to escalate that issue to their account manager, screenshots, descriptions, and everything, please do so as early as today, so that they, yes, sorry, Grace?
Let me interject that. The issue for where it is, how do I put it? The issues that will be considered for penalties and interest and iteration on the same is on duplicated invoices and overstated invoices, not the issue on credit notes.
All right, that's well noted. So I hope our taxpayers have been guided on the same. Allow me,
That's not an
Grace.
issue for posing a challenge on filing. Your return will go through.
My apologies, Grace. I think I might be having a network challenge. I don't know if you can hear me.
Yeah, you're back.
Oh,
You're
okay,
back.
fine. All right. Sorry about that. All right. I think it's now 11 a.m. and we were hoping to wind up around this time. The last two questions maybe that are still coming in, you've already touched on them throughout the presentation, but it's a request for you to restate what you'd mentioned earlier on apportionment, and then again, restate the clarification and the update we've done in regards to section D2, that we're no longer pre-populating that, but also maybe you can re-emphasize that even though the validation rules have been relaxed for that, if those taxpayers were having configuration issues in November, they should work towards resolving that, as when validation comes back, then the issue will persist. So those two issues, and then to the team on standby, please continue to respond to the issues that have not been addressed throughout the presentation and the Q&A. Then we'll wind up with those two questions and a brief comment maybe from Mudhoni, if she'd like to touch on the issue of eTIM's Android, I believe. But Mudhoni will bring you back on very briefly in case you have any final comments. And then Grace, and then we close.
Okay, so let me start with exports. Now, what the new version of the return 15.0.9, I've seen someone comment why in the iTax portal in the narration, it's still stating the version is 15.0.8, but when you download it, the version is 15.0.9. We'll change that. That's a small change. It might have been an oversight on our side when we were deploying the return. So we'll fix it, but the return in itself is actually 15.0.9. Now, back to exports. We have done a relaxation on exports. That is now one of the changes we have implemented with the new version of the VAT auto-populated return. Even the normal return, the same applies. And the reason as to why we have done that relaxation is because we need to give ourselves time to finish the integration with ICMS. The new aspect of the time of supply for exports being at the point where you're in possession of a certificate of exportation changes everything, because it means we need to start validating those documents so that that sale is an actual sale. So for now, the validations have been relaxed, both on a line item and on the total amount for D2 only. And by line item, it is here in the return where you can see you have invoice number, type of exports, description, that is the line item. And then now for the lump sum amount, it is here in the return. Usually you remember the uniqueness of D2. It is the only section of sales where you have to import a CSV. It's not like D1 and exempt and general rated where you have lump sums. Section D2 does not have that. You have to actually import a CSV for you to declare your sales. So for now, the relaxation has been done, which I know it's a win for the guys who had not actually filed their returns. But now the compliance checks will be done at officer level, because if you're declaring a sale and the component of that sale, there is a missing of a certificate of exports, then there's a challenge there. So that one I know will be addressed at a level of compliance, audit, and refund level, where refunds now taxpayers have to have refunds on the sale. But moving forward, we will, once the integration is complete, we shall be validating eTIMS invoices for exports. We shall be validating custom documents for exports. The documents we are looking at the certificate of exportation, which serves exports to foreign countries. We are looking at the certificate of receipt, which serves exports to an EPZ or an SEZ. We are looking at approval notification or an exit note for exports to an EAC region. There are four. Those are the documents we shall focus on, because that is what ICMS provides. So once that integration has been complete, the validation rules will be reinstated, and they will not be reinstated from the period where we implement it. We will reinstate the validation rules from where the law became enforced, which is the December 2024 return. So this is a window for D2, but that window will be closed once the integration is complete. So right now, exports, purely capture your exports. For anyone who's not filed their VAT return, capture them manually in your VAT return for exports. If you had already filed your VAT return and you had received CSVs, because even the CSVs are no longer being populated. For anyone, I think I've seen a comment somewhere that I'm still getting CSV files of, I have a CSV file for exports. That is not an auto-populated return that has been downloaded today. We implemented the changes yesterday. So I know for a fact the CSVs are not there as at today. If at right now it's 11:08 a.m., if you're to download your auto-populated return now, your CSVs for D2 are not there. The validation rules for D2 are not there, both on a line item and on a total amount item. But again, remember for sheet D, there are two components of zero rated. There is D1 for local or exempt avail. The validation rules for D1 remain as is. They have not been impacted by the changes through the tax law amendment. I think I've addressed the aspect for D2 in whole. So let me touch on apportionment. Now, apportionment of input VAT has been implemented in the VAT return. What the law has now brought in, it has removed the thresholds for apportionment of input VAT. Before, what that means, the law as it was for the VAT Act will apply up to November 2024 filing. So if you're still filing, I have two categories of taxpayer in this sensitization. There are those who have not filed the November 2024 return, and there are those who have not filed December. So if you're filing your November 2024 return, the rules and the laws as they were before, when it comes to apportionment of input VAT, still apply. They change when you're filing your December 2024 return, meaning the both extremes, the above 90% and below 10%, have been removed by the Tax Law Amendment 2024. The gainers of this are any taxpayer who had, when it comes to apportionment of input VAT, in this perspective, you must have exempt sales. That is the first categorization. For you to have apportionment of input VAT, you have exempt sales. That's the first thing. If you have no exempt sales, apportionment does not apply to you. But if you have exempt sales, then we now start talking about apportionment. So anyone who had a percentage or who has a percentage below 10 is the biggest gainer, because as the law was before, when it came to apportionment of input VAT, where you're multiplying by the common input, the common input is captured under serial number 17 on sheet O, input VAT attributable to taxable and exempt supplies. That is the 5 million. So anyone who had a percentage below 10% would actually be gaining from this change in law, because before there was zero claiming. But now what is happening is, with this change in law, you are claiming as per a percentage. Let me give an example. Say, for example, my taxable supplies total is my taxable supplies total is taxable supplies. In this case, we said they are general rated sales plus zero rated sales. And if it is a tax period where other rated sales are applicable as per the Finance Act 2023 plus other rated sales, that is how you compute taxable supplies. When it comes to the denominator of that fraction, we are talking about total supplies. Now, what do we, when we say total supplies, what are we looking at? We are looking at general rated sales, the total now, plus other rated sales, depending on the tax period we're looking at, plus exempt sales. So the denominator is where the exempt sales is in the fraction. So for example, my taxable supplies could be 5 million. As an example, I divide by my total supplies, which is what, 8 million, for example. And then I have a 0.625 return, then I multiply by 100, and then I get 62.5. So that becomes the percentage where you multiply the 5 million in this presentation I have. So it should be 62.5% multiplied by 5 million. The result you get, you reduce it from 5 million, and that is what becomes your non-deductible input VAT. That is how apportionment works. So anyone who used to get or who is getting a percentage between 10% and 90% have not been affected by this law. For them, it is business as usual. Everything remains the same. The people who are impacted by this change in law is anyone whose percentage in terms of their taxable supplies divided by their total supplies is above 90, because anyone who used to have above 90%, now that is up to November 2024, they would enjoy this input VAT in serial number 14, the 6.9 million in full. That becomes their full deductible input VAT. But with a change in law, if your percentage is 95%, now it is not full, it becomes 95% of now whatever you've captured as the common input. So take note of that. The biggest losers in this case with this change is anyone whose percentage is above 90. The biggest gainers in this is anyone whose percentage is below 10%. And then anyone who is in between is business as usual. Everything remains as is. And that is the change in apportionment. So remember, if you've not filed your November 2024 return, the apportionment remains as is in the return, as per the previous law, as per what was on the VAT Act before, the tax law amendment. But now the change happens in the December 2024 return. I really hope it has come out clearly. now in terms of apportionment.
Asante sana, Grace. I appreciate you taking the time to restate the same. Much appreciated. Allow me then to request as we wind up Madam Mudhoni from our e-Teams operations team. I know during the presentation, perhaps we requested if you're in a position to speak to the workarounds for some of the taxpayers moving forward who are encountering challenges on specific e-Team solutions, you can. Then I'll invite Mr. David Busaule, who's joining us from the BTO team, Grace's colleague, to close us off maybe with, again, restating some of the enhancements that we can expect, where we're headed overall with this return, and even words of encouragement. So Busaule, please be on standby, and then we'll hand over to you as we wind up. For all those who are requesting, this session has been recorded and will be available on KRA TV. KRA TV is a YouTube channel and all the live recordings. And for previous key sensitizations are available there. Mudhoni, over to you.
Thank you, Mandy. So the main issue has been with the eTeams Android devices. So for this one, there has been a workaround around it, but right now we are working on a permanent solution, which is currently underway. We will communicate once this is done, hopefully before the training sessions are over. But for any taxpayer who's encountering any problem with the Android devices, please, you can visit our offices at Jekwa Tower, 7th or 8th floor. We'll be able to assist you on that. Or you can as well get in touch through the email address that was provided, teamsupport@kra.go.ke, and we'll be able to assist you in the interim. Thank you.
Thank you so much, Mudhoni. Thank you to the entire eTeams team who've been on standby responding to the questions, comments, concerns, compliments, the feedback, which we always welcome during these sessions. Asante sana. I hope taxpayers are now well guided on the same. Good morning, Busaule. Maybe I can just request you to come on at this point to speak to some of the VAT pre-populated return concerns that you've seen in the chat and that you've had so far. Then we'll wind up hopefully in the next 5 minutes or so. Karibu sana.
Okay, thanks, Mandy. Am I audible?
Yes, loud and clear.
Okay, happy new year, everyone, and thanks, Grace, for the wonderful presentation and the passion around the presentation. Yeah, I think we need it in KRA. Anyway, to our dear VAT registered taxpayers, we hoping a new year is good. I think just I believe she has taking you through the different error messages. Yes, we are making the process better, and we understand the pain points each and everyone is going through. It's a difficult transition for both KRA and you guys. It's not that it's easy. We didn't, and we are not taking it for granted that most of you are actually trying their best to be able to be compliant going forward. Some of the conditions, some of the rules, some of the validations are probably new to you and you're getting used to them. And for us, we are trying to use the November, the December, probably the January and the February filings to really clean up on your data issues, clean up on any other pending issues. A few pending issues on the side of the KRA. As from a basic analysis, most of the issues are just issues to do with the validations. It's not really a system issue. It's just that probably you are claiming the wrong invoice, you're using the wrong debt. Probably the issue of the credit note, the issues of credit note. So I think with time, as you build on this knowledge and you at least you understand what KRA is looking out for, we believe the filing for January and February will be much better. And by that time, we'll have resolved hopefully most of the issues which we've carried forward from November. Some we've already resolved them now. The ones for December, we resolved some of the issues in January. And I think, yes, KRA is willing to work with you, and you can always engage your account managers. You can engage your contact center in case you still need some help here and there. And of course, I know we still have some pending issues, especially some partly caused by you, but KRA is also trying to resolve the issues of duplicity, where your device, your ERP through the device transmitted the same invoice number more than once. I believe it's an advanced stage of resolution. The issues of overstated and understated eTeams invoices. I think we are we are looking at both issues and trying our best to see how can we help, even if it is not necessarily caused by us, but we are going the extra mile to see how can we enhance your experience as a VAT registered taxpayer when filing the VAT return going forward. And apologies again, we had planned to resolve most of your issues by the time you are doing the filing by 20th, or rather the December return filing in January. But some other unavoidable circumstances arose where the Tax Laws Amendment Act was assented to on 27th of December, and all the provisions in the Tax Laws Amendment Act were effective from 27th December. And now being a legislative change, we had again to do some reprioritization and move most of our resources from probably closing quickly some of the pending VAT populated issues. We are not saying we are not working on them, it's only that now the pace and the speed at which we are resolving has kind of probably gone a bit low because some of those issues are very urgent. We need to resolve them by, the pay return was due by 9th. There's some other things to do with the VAT return are due by 20th. Some other issues to do with excise again, the registration. So I think there's quite a lot where some of the resources need to be moved to support the Tax Laws Amendment Act, which we hope to be done probably by end of the month, and we can fully get back to resolve any of the pending VAT populated return issues. So we hope this will be the final month. Probably you are filing your VAT return with some of those pending issues we've carried from December. We apologize for that. It's only that we are also stretched to just support you on all fronts, not just the VAT return, but support you on all the tax laws amendment changes and still support you on all other processes to ensure that you are able to get services from KRA. And I think with that, few remarks. We are also planning, and I know probably Grace had already mentioned this, we are really working hard to provide a dashboard on your end where you can be able to track some of these, some of your invoices on a daily basis, even before the month comes to an end, and you can take corrective action probably when you see a 1 trillion sale has gone through or some of the invoices have been duplicated. You can easily take corrective action within the month, because I think the challenge you are having is some of these corrective actions can be taken after the period, and of course it may not affect the period on which you are filing. And I think, yeah, and also we are already looking towards moving towards a web-based return. Again, we're really working towards just making it easier for everyone. So yes, we are already exploring a web-based return. Probably after running with this return for about 6 months or so, we should probably transition to a web-based return maybe from July 2025. And again, it will now be web-based. There will be no importing. There will be no importing of CSVs, importing of returns. You'll just be looking at the lump sum values for sales, purchases. Of course, you can get the drop down. So we are really working hard around just making the experience much better for everyone. So that is just to encourage everyone that KRA is working hard to enhance your experience, resolve any pending issues on our end, and also we encourage you to resolve some of the issues on your end. Because even if KRA resolves all the issues which are pending on our end, which are not so many as we speak today, you still need to resolve the issues with transmission, issues to do with duplicity on your end, issues to do with issuing wrong invoices, issues to do with forgetting to capture buyer's pins. I think it's a collaborative effort to ensure that we are able to have a better filing experience going forward. I think with those few remarks, Mindy, back to you. Okay.
Asante sana. Thank you very much, Mr. Busaule, who did not introduce himself. Busaule is our manager in the Business Transformation Office and one of the leads in rolling out this pre-populated return. In the interest of time, allow me to close it out there, but sincerely appreciate Grace Gadhia from the Business Transformation Office for the last 2 hours taking us through this return in detail, restating a number of positions that taxpayers need to know in order to comply. As she said, we are here again today afternoon, tomorrow morning, I beg your pardon, not today afternoon, tomorrow morning, tomorrow afternoon, and on Monday on the filing and payment due date. So please make time for that if you'd like, and if you've been unable to file the return, we want to support you fully to comply. Thank you very much to Caroline, Catherine, Maxwell, Mudhoni, and the entire eTeams operations team for supporting this session. Once you respond to the Q&A, it saves us a lot of time towards the end. A big thank you also to Cheryl Sanya, Shami Korongo, and Anthony, who have also been here from the start to the end to ensure that your questions, concerns, are responded to. A big thank you also to the marketing team, Madam Margaret Gashina. A big thank you to our sign language interpreter. We want to ensure that our sessions are inclusive and accessible. So you will be able to view the recorded session on KRA TV with that sign language interpretation as well. So thank you very much, Faith Cheptile, for that. Once again, asanteni sana. The session is now over. Allow me to appreciate you all, especially taxpayers, for honoring our invite. We don't take these opportunities for granted to engage with you and to sensitize you on some of the new changes taking place. Asanteni sana, and I wish you a blessed rest of the day.